Hello everyone, welcome to EduTap and welcome to today's session. So I hope that I'm clearly audible and visible first of all. And in today's session, we are going to cover three very important topics. The first one is regarding the SRO status that is granted to the FIMMDA. So we will discuss that what is this SRO status that has been granted to the FIMMDA in regards to the financial markets. Okay. Then we are going to discuss about the RBI decision to ask the banks to dispense 100 and 200 rupee note within a given timeline. So what is this timeline and how much the dispensation of 100 rupees and 200 rupee note will happen? So all of this we are going to discuss in today's session, as well as we are going to discuss about the RBI that has permitted the minors to operate the bank account. So how this decision is different from the earlier decisions of the RBI or earlier guidelines of the RBI, that also we are going to discuss in today's session. Give me a thumbs up if everything is like clearly audible and visible and there is no problem that is coming. I hope everything is fine. And good morning to all of you. Welcome to the session. I know that times are tough at this point of time. There is a lot of uncertainty that is going on because of the war-like situation. But I hope you are studying well and I hope you are keeping your mental health in check, and if there is any problem you can always reach out to the team that we have. We are always there to help you out in these tough times. It is tough for all of us, and I hope that you all are very good. And if there is any problem that you face and any confusion or any like mental health problem also you are facing, you can write in the comment section below. I will try to help you as much as I can. Okay, so thank you for joining the session again at this point of time. And now, before starting with the session, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos. And do join our Telegram channel where you will get the PDF of the session. And the link for the Telegram channel is provided in the description box below. Okay. Good morning, everyone. So let's continue meeting like this so that your preparation keeps on track, as well as you can take your mind out of that uncertainty that is going on in the country right now. Okay. So now let's start with the first news article, that is recognition of SRO in financial markets regulated by the Reserve Bank of India. Okay. So first of all, the Reserve Bank has recognized the FIMMDA, that is a Fixed Income Money Market and Derivatives Association of India. Now the FIMMDA has been recognized as a self-regulatory organization. How many of you have heard about this term self-regulatory organization? I have taken multiple sessions on the self-regulatory organization because the SRO, there was a omnibus framework that was released for SRO. That was the framework for the banks and the other regulated entities. Then there was the SRO NBFCs framework that was released. Then there was the SRO account aggregator framework that was released, and there was SRO financial market. This framework was also released. Okay, so we have discussed the SRO from time to time. Now SRO, they are the self-regulatory organizations that are recognized by the Reserve Bank of India, and the SRO, they work as a linkage between the regulated entities and the Reserve Bank of India. Okay, so SRO, they are the self-regulatory organization that will work as a linkage between the regulated entities, because there are a number of regulated entities, and the Reserve Bank of India. Okay, now the FIMMDA has been selected or has been recognized. Now the FIMMDA has been recognized as a SRO for the financial market, for the regulated entities under the financial market. So it will connect, the SRO FIMMDA will connect the regulated entities in the financial market with the Reserve Bank of India. Okay, so now which financial markets are regulated by the Reserve Bank of India? Are you aware about the financial markets that are actually regulated by the Reserve Bank of India? So that we will discuss. Okay, so first of all, the FIMMDA has been recognized as a SRO in the financial markets regulated by the Reserve Bank of India. Now the Reserve Bank had issued the framework for recognition of the SRO for recognition of the self-regulatory organization in the financial market regulated by the Reserve Bank, and invited application. The RBI released the framework for the SRO in the financial market and invited the application that whoever or whichever entity wants to become the SRO in the financial market, they can send the application to the Reserve Bank of India. So FIMMDA sent application to the Reserve Bank of India to become the SRO in the financial market, and at last it has got the recognition and approval from the RBI to work as a SRO in the financial market. Okay, now which financial markets are regulated by the Reserve Bank of India? So SRO connects that those regulated entities in that financial market that is regulated by the Reserve Bank of India with Reserve Bank of India. Okay, so now first of all, the framework for the SRO in the financial market This was released in August 2024. That is last year it was released. Okay. Now, first of all, let's discuss a little about the framework for the SRO in the financial market so that you are aware about that which financial market are regulated by RBI and what is the basic framework. We are not going to discuss the objectives and the responsibilities and all those points because we have discussed it again and again in the previous sessions. And usually the objectives and the responsibilities of the SRO remain common in any of the SRO entity for the banks, for NBFCs, for account aggregators and such. So now here we will only understand the most important points for the SRO for the financial market. Okay. So first of all, the Reserve Bank has a legislative mandate, to make the laws or to make the rules and regulations, and it regulates the interest rate and foreign exchange markets, okay, which are critical for the resilient functioning of the financial system and the broader economy. So actually the Reserve Bank of India has the mandate to regulate the interest rate market and the foreign exchange market. Okay, so these are the two markets that are regulated by the Reserve Bank of India. Now the stock market is regulated by who? Can you tell me that who regulates the stock market? Is it the Reserve Bank of India? Is it SEBI? Is it IFSCA? Is it IRDI? Is it PFRDA? Who regulates the stock market? The interest rate market and the foreign exchange market is regulated by the Reserve Bank of India, and the stock market is regulated by the SEBI, the Securities and Exchange Board of India. Okay. So this is the basic idea. So Reserve Bank has the legislative mandate to regulate the interest rate and foreign exchange market, which are very important for the functioning of the financial system and the broader economy, and it ensures the financial stability. Now, as part of this mandate, Reserve Bank is tasked with the regulation. It makes the rules and regulations, and it is mandated. Reserve Bank is tasked with the regulation, with the development and oversight of the interest rate markets, including the government securities market, in which the government securities are bought and sold. So the primary market of government securities, in this the Reserve Bank of India issues the government security on behalf of the government of India. Then there is secondary market of the government securities, for which the RBI has NDS OM system, that is negotiated dealing system, the offer matching. Okay. So for the government securities, there is primary market and there is secondary market. In the primary market, the RBI issues the government securities on behalf of the government. Okay. And in the secondary market, the investors can trade among themselves. The government securities, the investors can trade among themselves through the NDS OM platform. That is negotiated dealing system, order matching system. Okay. So you can understand that the government securities market is regulated by the Reserve Bank of India. The money market, that is the short-term market, is also regulated by the Reserve Bank of India, including the market for repo in the government securities and in the corporate bonds. The foreign exchange market is also regulated by the Reserve Bank of India. The derivatives and interest rates or prices, foreign exchange rates and credit, all of this is regulated by the Reserve Bank of India. Okay. Yes. Now, the Reserve Bank is also responsible for regulation of financial market infrastructure. Now, if the RBI is regulating the interest rate market and the foreign exchange market, the regulation of this interest rate market and the foreign exchange market is under the Reserve Bank of India. So, RBI forms the regulation for the financial market infrastructure for the regulated entities that help in the functioning of the interest rate market and the foreign exchange market. So the regulated entities that work in this interest rate market and the foreign exchange market, so they are also under the Reserve Bank of India. Okay, and the RBI is responsible for regulating the financial market infrastructure, including the financial market benchmarks for these markets. Now SROs, what the SROs are going to do in the interest rate market and in the foreign exchange market, the SROs can play a vital role, a very critical role, by proactively developing and ensuring adoption and adherence to the industry standards. So now the self-regulatory organizations, they will work as a bridge between the Reserve Bank of India and between the financial market entities. Okay, regulated by the Reserve Bank of India. So whatever problems the financial market entities are facing, or whatever rules and regulations or guidelines the RBI has released for these entities, So the SRO will help in the linkage between the entities and the Reserve Bank of India. The SRO will take the problems of the financial market entities to the RBI and will explain the rules and regulations of the RBI to the financial market entities. Okay, so SRO will work as a bridge in between the RBI and entities. So SRO, it can play a vital role in proactively developing and ensuring adoption of the industry standards by the entities and the best practices by its members in the financial market also. So this is the basic idea of the SRO. Now there are some data points about the SRO in the financial market that you need to keep in mind. That first of all, SRO in the financial market should be a not-for-profit company registered under Section 8 of the Companies Act 2013. The net worth of the applicant, that is the SRO in the financial market. Let's say the FIMMDA wants to become the SRO in the financial market, so the applicant must have a minimum net worth of 10 crores. So this is very important point, and such a point like in regards to SRO, NBFC, such a question has come in the RBI Grade B examination last year in regards to the net worth and such. Okay, so remember that for the SRO in the financial market, for the SRO in the financial market, any applicant that want to become the SRO in the financial market, it should be a not-for-profit company. It should be a not-for-profit company registered under Section 8 of the Companies Act 2013. And the applicant must have a minimum net worth of INR 10 crore and should possess or have the ability to create the infrastructure to enable the discharge of responsibilities of the SRO in the financial market. The shareholding of the SRO should be sufficiently diversified. That means no entity shall hold 10% or more of its paid up share capital either singly or acting in concert with its group entity. Any confusion in this point? It should be a not-for-profit company. Minimum net worth should be 10 crores. Okay, and the shareholding should be diversified. No entity on the single basis or acting in concert should hold more than 10% or more than 10%. Okay, clear? Give me a thumbs up if this is clear. So these are some of the data points that you need to keep in mind. Now the SRO of the financial market, that is now FIMMDA, that is recognized as the SRO in the financial market, should submit an annual report to the Reserve Bank within 6 months of completion of the financial year. So when the financial year of 2025-26 will finish, so after the finish of this financial year, within 6 months, the annual report has to be provided to the RBI. Okay, so paid up share capital means shares. So shares that have been bought. Okay, paid up, that is the shares that are being paid for. Okay, so paid up share capital, you can understand that this is the share capital of the shareholders. Okay, the share value that the shareholders hold. Okay, last point. Okay, the shareholding of the SRO should be sufficiently diversified. Diversified means that no single person should hold a major chunk of the SRO. Let's say that this is the SRO and let's say one entity hold 50% of the rights in the SRO, or 50% of the shareholding of the SRO is in the hands of this entity XYZ. Now this entity is going to take all the decisions regarding the SRO. Okay, and the other entities, they have very small chunk in the SRO. So the other entities, they will not have much say in the SRO. So in the SRO, the shareholding should be diversified so that a single entity is not having too much control in the SRO. Okay, so the shareholding of the SRO should be sufficiently diversified and no single entity on the single basis or in the group basis, no single entity should hold 10% or more of its paid up share capital. Got it? Yes. Any confusion, anyone? Now periodic or ad hoc returns has to be submitted as per the prescription of the Reserve Bank of India, but the annual report has to be submitted within 6 months of the completion of the financial year. Now at least 1/3 of the members in the board of the SRO shall be an independent director. That means in the board of the self-regulatory organization, at least 1/3 of the members should be independent directors without any active association with any category or class of the entities for which SRO is established. Let's say SRO consists of multiple members. SRO consists of multiple members that are the members of the financial market. Okay, so SRO consists of multiple members from the financial market. Now SRO should have 1/3 of the independent directors in the board of the SRO, and these independent directors should have no relationship with any of the member of the SRO. That means these independent directors should have no association, no active association with any category or class of the entities that are members of the SRO. I hope this is very much clear that the 1/3 independent directors that are in the board of the SRO, they should not have any active association with the members of the SRO. Because if, let's say, if I am a relative, if let's say Kritika is a relative of Shalini, okay, so I will try to prefer Shalini and I will try to provide any of the requirement that the Shalini has. Let's say Shalini is saying that provide me this license. I will try to provide her that license or something. So similarly, if the independent directors have any association with the member, with a particular member, the independent director might try to work for that member, might try to make the decisions in favor of that member. So that's why the independent director should not have any association with any member of the SRO. That is the basic idea. Now, the board shall, among others, frame a policy on rotation of directors for important positions in the board. So there are different important positions in the board. Let's say there are different committees. Okay, risk management committee. There is committee for the infrastructure development. There is committee for the regulations or for the information dispensation to the members. So there are different committees and there are different head of the different committees. Okay, so basically there the SRO, the board of the SRO should frame a policy on rotation of directors for important positions in the board. Any change in composition of the board or any adverse information, let's say there is a new member that is coming in the board, or there is a change that has happened in the board, so the RBI should be immediately informed about such a change. Or if there is any adverse information about any director, that this director has been like someone has filed a case against this director in regards to moral turpitude, that this director has done some ghapla, has done some like fraud or something. So RBI should be made immediately aware about it. Okay, so this is the basic idea. No, actually minimum number of entities are not mentioned here directly. Okay, so now these lines are directly taken from the RBI website. So whatever they have said, I have told you that. Okay, Nitya, I will confirm it in the comment section below, but this was taken from the RBI website. Okay. Now, an application seeking recognition as an SRO in financial market. So the FIMMDA sent an application to the RBI that the FIMMDA wants to work as a SRO in the financial market. Okay. So the application was received from FIMMDA by the RBI to work as a SRO financial market. Now, based on an examination of the application, the RBI saw that the FIMMDA has the net worth of more than 10 crores. Okay, or let's say 10 crores and more than 10 crores, as well as the FIMMDA has a well diversified structure. The shareholding is well diversified. So based on the examination of the application against the relevant requirements under the framework, it has been decided to recognize FIMMDA as an SRO in financial market. So FIMMDA, who is FIMMDA? We have understood that FIMMDA is Fixed Income Money Market and Derivative Association of India. Now this is an association of the scheduled commercial banks, public financial institutions, primary dealers, insurance companies. Now all of these are members, or all of these are the entities that are present in the financial markets. Okay, now the FIMMDA, it was incorporated as a company under section 25 of the Companies Act 1956 on May 4, 1998. Okay, FIMMDA is a voluntary market body, so it is not for profit organization, we can say, because it is a voluntary market body for the fixed income money and derivatives market. Okay, so you can understand that this works in the money market domain, derivatives market domain. Both of these domains are under the Reserve Bank of India. FIMMDA has members representing all major institutional segments of the market, of the financial market, that is under the Reserve Bank of India. That's why FIMMDA has been provided with the SRO status. This is the idea. See, SRO, they get the membership fees from the members. So let's say this SRO has 100 members, so it will get the membership fees from all the members. Okay, why the members will want to join the SRO? Because these members, they are able to access the infrastructure facilities, or they are able to access the best practices that SRO is able to provide. And the SRO, it works as a mediator between the Reserve Bank of India and the members. So the members provide a membership fee to the SRO, and SRO work for the members, and the SRO work as a bridge between the members and the RBI. Okay, clear? Now coming to the next news article, dispensation of 100 rupee and 200 rupee notes. Now how many of you, if I give you a choice of rupee 500, let's say you want to go to the market, and you have a 500 rupee note, or let's say you have a 200 rupee note, one 200 rupee note and the other 100 rupee note. So if you are going to the market, which note are you going to prefer more if you want to buy some small products like some vegetables and fruits, and let's say you are going to buy some small products? So would you prefer a 500 rupee note, or to like these notes, the small notes? So usually when I go to the market, I see that I am not able to use the 500 rupee note. Even if I go to the shopkeeper and I say that I have this big note, so they are saying that, okay ma'am, just do UPI, because we don't have the khulla, we don't have the change, right? So would you prefer to have 500 or these? I would prefer to have these, right? Many of the people, they prefer to have the small notes. So it has been seen by the RBI that the people prefer to have these small notes, but the ATMs usually dispense the 500 rupee note. So it has become a problem, and that's why the RBI has came up with the solution. So as part of the endeavor towards enhancing the public access to frequently used denomination of banknotes. So frequently used denomination of banknotes are 100 rupee and 200 rupee banknotes. So it has been said to the banks, and it has been said to the white label ATM operators. So it has been informed to the banks and the white label ATM operators by the RBI. So RBI has informed the banks and the white label ATM operators that they shall ensure that their ATMs dispense 100 rupee and 200 rupee denomination banknotes on a regular basis. Okay, so white label ATM operators, these are the non-bank entities. These are the non-bank entities that provide the facility of the ATM. So these are the white label ATM operators, or these are the white label ATMs. These are the ATMs that are run by the non-bank entities, just to expand the access of the ATMs. Okay, so this is the idea. Now it has been said that the banks and the white label ATM operators shall ensure that their ATMs dispense or provide the 100 rupee and 200 rupee denomination notes. So it has been said that by September 30, 2025, so by September 2025, 75% of all ATMs in the country shall dispense either 100 rupee or 200 rupee denomination banknotes from at least one cassette in the ATM. Okay, and by March 31st, 2026, 90% of all ATMs shall dispense, 90% of all ATMs in the country shall dispense either 100 rupee or 200 rupee denomination banknotes from at least one cassette. So you can see that by March 31st, 2026, 90% of all the ATMs should be dispensing the notes. Clear? Now, this was all about the dispensation of the 100 rupee and 200 rupee banknote. Now, coming to the next news article, that is about the opening of an operation in deposit accounts of minors. So, coming to the third news article, so Reserve Bank of India has issued guidelines recently in the RBI from time to time has in the past issued guidelines regarding the opening of an operations in the deposit account of minors. Like I remember when I was in school in my 9th or 10th, I like some banks came to our school, and they started like calling all the classes, and they started writing our name, the parents name and such, and they started taking the details, and they opened the bank account at that time only in the school itself. So you can understand that since so like 10 years ago, or 10 to 12 years ago, this system started, that even the minors started to have the ATMs, the bank accounts. Okay, so Reserve Bank has issued guidelines in the past to banks on opening of an operation in the deposit accounts of minors. Now a review has been done recently these guidelines have been reviewed regarding the opening and operation of the deposit accounts of minors, and there are certain changes has been done. Some rationalization and harmonization of the existing guidelines have been done. Okay, so existing guidelines has been made with a view to rationalize and harmonize the existing guidelines. So basically, in the past, the guidelines were released, and now a review has been done in the existing guidelines to make it more rationalized and harmonized. Okay. So minors of any age, first of all, minors of any age may be allowed to open and operate savings and term deposit account, through his or her natural or legal guardian. This is the basic idea, that through the natural guardian means that parents usually. Okay. Uh, or legal guardian means that legally who is the guardian. Let's say my Mossy is my legal guardian, or let's say some my nanny is my legal guardian. Okay, so this is the basic idea. So minors of any age may be allowed to open and operate savings and term deposit accounts through his or her natural or legal guardian. They may also allowed to open such accounts with mother as guardian. So this is the basic idea. I hope very easy to understand. Now coming to the second point, minors above an age limit not less than 10 years. So basically the minors above 10 years, up to such amount that is allowed by the bank, as per the terms and conditions that is allowed by the bank, they may be allowed to open and operate savings or term deposit accounts independently. So let's say you are more than 10 years old, so you can open and operate the saving account or term deposit account independently without the need of a legal or natural guardian. Now what is the difference like from the earlier guidelines? So in the earlier guidelines, you can see these are the earlier guidelines. In this, it was only mentioned about the savings bank account. The term deposit accounts were not mentioned, but now in the new guidelines, in the revised guidelines, even the term deposit accounts are mentioned. That means previously the minors above the age of 10 years, so basically if you are more than 10 years old, you can open the savings bank account independently. But now it has been said that if you are above the age of 10 years, now you can open savings account and term deposit account independently. So even the term deposit account you can open independently. Clear? Is this difference clear? That from the earlier norms, what is the change that has happened? So now it has been mentioned that the students, minors that are above the age of 10 years, they not only can open the saving accounts, but they can also open the term deposit account. Got it? Next is attaining the age of majority. That means once you have become a major and you are not the minor anymore, fresh operating instructions and specimen signature. That means your signature and the fresh operating instructions of the account holder shall be obtained and kept on record. Okay. Moreover, if the account is operated by the guardian, the balance shall be confirmed with the, because see, before your guardian had the control over the bank account, because let's say you were less than 10 years old and with the help of your guardian you opened the bank account in the bank, and the guardian was controlling your bank account in a way. But now as you have got major, like you have reached a certain age, and now you can have a independent bank account. So when you become the age of majority, and if the account was previously operated by the guardian, the balance shall be got confirmed with the person itself. Okay, so this is the idea, and all these requirements have to be told by the bank to the person on the prior basis before the achievement of the age of maturity. So this is the idea. Now the banks are free to offer additional banking facilities like internet banking, ATM or debit cards, checkbook facility, etc. to the minor account holders. So see, in the previous guidelines, now when the previous earlier guidelines were released in the 2014 or 2011 it was released, so only these 3 points were mentioned. And in these 3 points also, instead of saving or term deposit, only the saving bank account was mentioned. But now some additional norms have also been mentioned like this. Okay, so banks are free to offer additional banking facilities now, like the internet banking, ATM debit cards, the checkbook facility, etc. to the minor account holders basis on their risk management policy, on the risk management policy of the bank, on the product suitability and customer appropriateness. Okay, bank shall ensure that account of minors, whether operated independently or through a guardian, are not allowed to be overdrawn. That means the credit cannot be taken on such account, they cannot be overdrawn, and that these always remain in credit balance. That means they always should remain in positive balance and can never go into the negative balance, because the minors, they should not be allowed to take loans, or the minor account should not be let overdrawn, because then it can be used in a negative manner. Okay, the bank shall perform customer due diligence for opening of deposit accounts of minors and undertake ongoing due diligence. So basically due diligence has to be taken and the KYC has to be done in any way. So this is the basic idea. So what are the changes? First of all, before, in the earlier guidelines, only these 3 points were mentioned: this, this, and this. Okay, and it was said that the minors above the age of 10 years can open the saving account independently and can operate the saving account independently. But now it has been said that the minors above the age of 10 years, they can open savings account as well as term deposit account independently, open and operate. The next addition is regarding the banks. They are free to offer additional banking facilities on the basis of the facilities that they want to provide. So it is in the hands of the banks that which facilities they want to provide. So they can provide the internet banking facility, ATM or debit cards, checkbook facility, and such facilities they can provide on the basis of the risk management policy of the bank, on the basis of product suitability and the customer appropriateness. Let's say State Bank of India thinks that okay, they can provide debit cards and ATM, and let's say they are also providing checkbook, but they think that internet banking is not required for the child, so they might not provide it. Okay, so banks are free to offer additional banking services, additional banking facilities on the basis of their own policy. Okay, banks shall ensure, now this is pretty straightforward, that the minor bank accounts, either it is operated independently or through a guardian, shall not be allowed to be overdrawn. Okay, and last is that KYC due diligence has to be prompt. Okay, so the above guidelines are issued under section 35A and 56 of the Banking Regulation Act 1949. Banks are advised to make new or amend the existing policies to align with these directions, and latest by July 1st 2025. Okay, any confusion in this? Now, is it all clear? Any confusion? So what are the changes that I have told you? All clear? Shall I show you the questions? Now, before showing you the question, let me tell you that there is perspective 360 degree series. If you like, many of the students, they have the fear of answer writing. They are afraid to write the answers. They don't know how to start, from where to start, how to write, what should be the format, what should be the points in the intro, body, and such. Okay, so perspective 360 degree series is launched for you who have the fear of answer writing or who want to practice answer writing basically. So this is the series that is taken by Jaskaran sir, and this is taken on Monday, Wednesday, and Friday at 5 p.m. Okay, so in this, you know the art of writing the answer. There are recent reports and recent schemes and recent topics that the Jaskaran sir takes in the perspective 360 degree series on Monday, Wednesday, and Friday. And on the recent topics, the questions are given to you and it is told to you how you can write the answer, and then there is also homework question that is given to you, for which you can write the answer in the comment section below, which is evaluated in this series also, free of cost, absolutely. Okay, so this is the idea. So now this is the first question. I hope it is very easy for you to answer the question now, and you have to tell me that for the SRO in the financial market, what is the minimum net worth? And the shareholding of no entity shall be dash percentage or more. Shareholding of no entity shall be dash percentage or more. So you have three questions now. That first of all, who has become the SRO in the financial market? The second question is, what is the minimum net worth for the SRO in the financial market? Third question is that the shareholding in the SRO financial market, the shareholding should not be more than what percent? Should not be word percent or more than word percentage. Okay, this is the basic idea. Now coming to the second question, this is your second question. I hope you will be easily able to answer this question also. You have to remember just 2 points were there in this news article. So if you remember those 2 points, you will be able to answer this question. Now the third question is this. Try to answer this question. I hope you will be able to answer this question pretty easily. And this is regarding the accounts of the miners. Okay, I hope you have understood this. But still, if there is any question, any confusion in any of the news article, do ask your queries in the comment section, and I will I will try to answer it. As well as I know that the times are tough. There is a lot of uncertainty that is going on in the country, especially in the areas that is near to the neighboring country or Pakistan. So those areas specifically, they are facing a lot of problems and blackouts and such. So I know that there is problem, and there is a lot of uncertainty, and you might be feeling uncertain, and like a bad feeling comes now when you know that there is going to be some problem. So do not worry about it. You can write in the comment section below, and I will try to help you as much as I can. Okay, and you can also connect with us through this mail ID. Thank you, everyone. Thank you for joining, and let's stay strong and let's keep on studying so that we are able to achieve our dream. And India is a very strong country, so we don't need to worry about it. Okay, so thank you, everyone. Thank you for joining the session. See you in the next session now. Last slide, last point. Okay. See, the banks shall perform customer due diligence. Customer due diligence means KYC, na? Know your customer. I think that I thought that many of you have already done the know your customer thing, na? So I thought you know about it. So in the know your customer, what happens that your photo is taken, your signature is taken, your Aadhaar card or your like ID proof is taken. Okay, so this happens on digitally. This can happen digitally. So banks, they have to perform, like if they are opening the minor accounts, they have to perform the customer due diligence for opening the deposit accounts of the minors also. So they should undertake ongoing due diligence as per the norms of the KYC, that they have to take the Aadhaar card or they have to take the signature photo and such details. Okay. Defense news are not important as such for like this comes in like defense news are not important from the finance current affairs, but the defense news becomes important from the general awareness point of view from your phase 1 specifically. Okay, and if there is any big topic that comes on it, if there are editorials that are released on the defense news regarding the regarding but defense news, they are mostly important from the GA point of view for your phase 1. Okay, because there are defense exercises that happens, or there are some particular new jets that India buys, or there are new air defense system that India buys, or there are air defense system that are used a lot. So those news become important from your general awareness point of view for the phase 1. Okay, like in the defense section. So from the descriptive point of view, I don't think it will be much important for now I'm saying. Maybe later on there might be some news that comes that become important, but for now, for descriptive, it is not so important from general awareness point of view. Okay. Okay, thank you, everyone. Thank you for